Well, everyone, it's looking like it's officially begun. We just got some new housing market data and some new crucial economic data for China's economy that shows China's $62 trillion housing bubble, the biggest bubble in history, has officially started to burst. It seems like every single day now, we're now getting some new news that is showing the collateral damage from Evergrande's collapse. It seems like since China implemented its 3 red line rules, developers have been dropping like flies. But it's not just property developers and the housing market that Xi has been targeting in his huge everything clampdown. We're seeing tech companies get destroyed like Alibaba. We're seeing the private tutoring industry get destroyed, gaming. And now the latest crisis in China is their energy issue. They don't have enough coal and winter is coming and it's going to be a cold, long, hard winter. But in this video, I'm going to go over specifically the new data we got that shows house prices in China are starting to plummet. And I'm also going to go over the latest GDP numbers that came out for China's economy. Remember, the second biggest economy in the world. So if they go down, we're going to feel it throughout the rest of the world. It shows that their economy is coming to a halt. Okay, so first things first, Evergrande, the most indebted company in the world with $300 billion in liabilities. They haven't been making any of their bond payments so far. So far, they've missed 3, and now they've got another bond payment due on Tuesday. So it'll be very interesting to see they make that payment. But the date I'm waiting for is the 23rd, because then they'll be 30 days since they missed their first bond payment, and then that means they'll officially default. But have a look at this, everyone. China home sales slump 17% as the Evergrande saga deters buyers. So China's residential property slump dragged on last month as a debt crisis at China Evergrande Group spread to other developers, keeping buyers away. And again, the reason why this matters is because, unlike other economies, China's housing market makes up 25 to 30% of its GDP. So if the housing market goes down, the whole country goes down. And also in China, they have a home ownership rate of 90%, and 70% of the country's wealth is tied up in the $62 trillion housing bubble. And you know, this bubble puts all other bubbles to shame with house price to income ratios in China, specifically Hong Kong and Beijing and Shenzhen. House prices are 40 times higher than people's income. Way worse than here in Australia, in Sydney, Canada, New Zealand, America, etc. And also like other countries where they say, well, that's all right, they'll just bail them out. Well, this is actually what China wanted, because they know that this housing bubble is beyond madness and it's turning into really a Ponzi scheme, especially with all these developers selling properties 4 to 5 years before they're built. The quality is absolutely trash. I'm sure we've seen many viral videos of these apartment buildings crumbling, cladding falling off the apartment building, or cars crashing through car park spots. And this is all going along with China's Common Prosperity Plan and the new plan to curb speculation away from the housing market, to say that housing is for people to live in, not for speculation, which I actually agree with them there. And I think something does need to be done in other countries around the world to cool this crazy global housing boom. It's not just happening in China, it's not just happening in the US, Australia, etc. It's happening in every major city around the world. But listen to this new piece of data, everyone. So home sales by value tumbled 16.9% in September from a year ago. So that's right, home sale values are down 16% in 1 month. That's followed by a 19.7% drop in August. This is according to Bloomberg calculations based on National Bureau of Statistics data released Monday. So this is hot off the press, people. So that is an absolutely massive drop, 35% in 2 months. And remember, their housing market is valued at $62 trillion. So if home prices drop 50%, and again, these prices are so crazily overvalued, these apartments are pretty much just empty shells. People don't even live in them. They have about 50 million empty apartments. People are only buying them to flip them in 3 to 5 years, because people don't actually own real estate in China. They just lease it off the government. And normally these apartment buildings that they build don't even last the full 70 years. Normally after about 20 years, they'll demolish them and build another one. And then the developers will get a kickback from the local governments and as well as the owners for every story they have. That's why they try to stack these stories as high as they can go and have as many levels as they can, because they get paid per level when they're demolished. But also some new huge data that shows that the housing market is weakening in China. And also later in the video, I'll get into how this could affect us throughout the rest of the world's housing market. Real estate investment slid for the first time since the onset of the pandemic shut down swathes of the economy at the start of last year. It's down 3.5% from a year ago, calculations show. So not just home sale values are plummeting, also people in China, they're waking up to the fact that prices don't just go up, they're waking up to the fact that, hey, the real estate market, the construction sector, these developers are in big trouble, and I don't think any of them would want to be buying homes in this high risk climate right now. But listen what's happening to Evergrande, everyone. This is crazy. So home buyers are already facing the threat of declining prices after years of gains. Measures of price growth, housing starts, and sales have moderated significantly in recent months. Moody's Analytics note in a recent report, Evergrande sales alone probably plunged 93% in September from a year earlier. That's crazy, everyone. Their sales are plummeting 90%. They're having to heavily discount their properties, and this is having domino effects on the whole real estate sector. So the property slowdown is one of the many headwinds facing China's economy. With sure growth slow last quarter, separate figures showed government efforts to curtail developers' leverage has exacerbated a cash crunch at Evergrande that's now spreading to other firms, prompting buyers to think twice about putting down deposits for homes that are yet to be built. No one is buying properties because they're getting afraid. Chief Greater China economist at Bank of America Corp said in an interview on Bloomberg Television, so we could see further downside on the economy. And the sales slump may fuel a vicious cycle by worsening the cash shortage at developers and forcing them to offer bigger discounts that in turn could reduce prices in a country where people keep a large chunk of their wealth in real estate. Mainland China property stocks declined on the report. So China's developers have faced a wave of credit rating downgrades and now account for about a half of the world's distressed debt. That's right, China's developers account for a half of the world's distressed debt. This is according to data compiled by Bloomberg. Contagion fears intensified over the past 2 weeks after a surprise default by Fantasia Holdings Group Co. and a warning from CITIC Holdings Group Co. that its default was imminent. But if that wasn't bad enough, everyone, look what's happening now. China's property and energy crisis delivers blow to GDP growth. So China's GDP growth expanded at just 4.9% compared with 7.9% in the previous quarter. But I'll bring up a chart here. We can see China is really actually going into a recession, and we all know that they fudge the numbers, they play with the numbers a little bit. So I'm sure the economy actually contracted in the third quarter, but they're putting it at 0.2% to make it look like they're not in recession. But we can see the trend here, people. It only grew at 0.2% in the third quarter. So next quarter, if the property market goes down and the construction sector goes down, we could see this turn negative. But Beijing has signals it's not rushing to stimulate the economy, suggesting growth may continue to slow in the coming months. That means the country's usual ferocious demand for construction-related commodities could weaken further. Also, what's contributing to the slowdown is the power crisis in China, which is leading many factories to shut down. So a nationwide shortage of coal led China's electricity output to fall in September from the previous month, forcing factories in more than 20 provinces to curb output or shut down completely. And why this matters for us around the world is because most of the goods are made in China. So if their factories slow down or shut down, these supply chain issues we're seeing in the US and Australia, etc., they're just going to get worse. And I'll bring up a chart here, everyone. We can see this having massive consequences on these developers and specifically the construction industry in China, which again, that lowers demand for commodities and resources for the rest of the world, so that affects the rest of the world's exports. So construction industry output fell 1.8%, also its first decline since the pandemic. Before the pandemic, that sector had never contracted in data back 1992. Central banks around the world have admitted they've lost the fight to inflation. A lot of them are now tapering and even lifting their interest rates. Bank of England may lift interest rates very soon. Next month, the Federal Reserve is set to taper their balance sheet, the one they've been talking or thinking about doing for months now. But inflation with the energy crisis, with the supply shortages, and also what they're not talking about, all the money printing and increasing the money supply by 30% in a year, that's making inflation not transitory. And so if it actually doesn't go away next year and they have to jack interest rates up to 1 to 2%, well, then we're going to see a great deleveraging, not just in China, but around the world. Because right now, the global economy relies on debt. And it's only because interest rates since the 70s and 80s, which were around 15 to 20%, have dropped to zero, the economy, the housing market, and the stock market, it seems like it only goes up. But now we're at rock bottom interest rates. Now that we've already printed our currency to infinity, what tools are the central banks going to have if we do see some kind of global financial crisis from China's housing bubble and economy plummeting? Well, newsflash everybody, they got no more tools. They got no more ammo. Maybe the Federal Reserve could do something called yield curve control, where it buys bonds to lower the yield like the RBA, the Reserve Bank of Australia, did to try to bring yields down on the 10-year Treasury to say 0.1%. But they've got surging inflation, so really the world is facing stagflation. And with these supply chain issues, with the energy crisis, the central banks are powerless to stop it. But the question you're probably wondering, everyone, will China's housing bubble burst, or if the housing market collapses, will that affect the rest of the world's housing market? Now, it may not crash prices like 50% like in the subprime mortgage crisis in the US, but you have to remember these developers, they don't just have developments in China. A lot of them have developments in New York, for example, LA, London, Sydney, Melbourne. They've got developments around the world, and if they can't get funding from selling their bonds because nobody wants to lend to them, well, then they're going to have to sell off assets around the world. Now, it may not completely crash house prices around the world, but it's not going to support house prices around the world, especially when they're pretty much peaked out right now. It looks like the housing markets around the world, like the US, Australia, they've priced in these lower interest rates. And next year, we're not going to see this crazy house price growth that we saw this past year. But everyone, that was just a quick update with what's happening with China's housing market, their economy, and what this could mean for the rest of the world. But that's just my thoughts. What do you think? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.